The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. If you have any questions, it's 877-927-6648. And I'm going to start the first part of the show today covering IBM and then also Apple. But I posted the first two charts that went into Tiger TV today. Was the long-term chart on IBM going back more than 18 months. And it actually goes back 2 years. It shows the huge ABCD butterfly pattern that formed at the top up here at that 215 level. And, of course, IBM is down sharply 5% on Friday, and then another 2%, and then another couple points today. But the important thing is, do you realize how high the Dow Jones must have been able to get to if IBM wasn't involved in that? Because, it's price weighted, and that really pulled the Dow down. So the Dow would have been, sharply higher on that amount. But because of IBM, the Dow was pulled down, a great deal. So that's you got to keep that keep it in mind. But something really different is happening at IBM with that much selling and that much volume and that big a gap down. They want out at any price. So something has changed, relatively dramatically, in my opinion, with IBM. So the main reason I bring this up is that I'm a technician. I don't really look at the news. And I don't watch earnings or anything like that. All I do is look at the patterns, and that tries to give me a little bit of an edge and leads me down the way that I like to go, because I don't believe half the stuff these people, well, more than half, about 99% of what they try to tell us on Wall Street, I really don't believe. So that's one that we were looking at, is the IBM. I'm not involved in that one at all. But the Apple, we've been watching this for quite some time, and we've looked at this weekly chart on Apple going back to 2005. And we've had 4 AB equals CD corrections. We're in the fourth one right now. We were looking for that to come in at around the $394 per share level. And so far, that's what's happened to it. And what I'm going to do now is just to give you an example of what we were looking at with Apple, because we had measured the days down between the BC leg on this daily chart going back through February and March and late March to early April, where we are now, and we calculated that should come in around April 19th, and that's exactly what happened on April 19th, which was Friday. Apple completed the price objective down at that level. And what I'm going to do now is I'm going to post the 30-minute chart on Apple. So what we can do is we're going to take a macro view and then go down to a micro view, because this is what I was watching. And I was looking at Apple on Friday, and what it did is had a little bit of a rally up to almost $400 a share, and then it pulled back right on the close to a perfect 61% retracement at that 390.67 level. And what I mentioned in the newsletter is that if Apple is any good, it's going to gap up on Monday, and so far that's what's happened. So that call that I've been looking at, that June 400 call, is now selling for around 20 and change. And so if you want to buy Apple, I would recommend that June call and risk about $8 of that premium. You could probably risk a lot less, because if Apple goes below 385 now, I would consider this pattern really suspect, because it should hold that 385. There was a lot of things there that said it should hold on the daily basis, the 1.618 expansion, the ABCD, and then also you had several ABCDs. So you had 4 numbers coming in at that 385 level when you went down to the 30-minute chart. And if you look at the daily, the number was 394. So if you take the lower figure, which was 385 per share, and it goes below that, something is wrong. So you don't have to risk very much, in Apple. The good part is that we haven't been bullish this stock for quite some time. After we made the island reversal up there at that 700 level in Apple, we are now, we're coming down. We've made a level that we're at right now, and we should rally. It doesn't make any difference what the rest of the stock market does. it still should have a pretty good rally from this. And if the market does rally, this might be the time where Apple actually leads some people. That might lead the stock market up. I'm not saying that it will, but this is the completed pattern, and so that's what you're looking at. Remember, it's a market of stocks. It's not a stock market. These stock market indices, each one of these stocks should be looked at separately, because it gives you a different, each one is different. But when you add them all together, it gives you the index, and that's what gives you the overall, picture, to really look at. So that's the thing that we're looking at. If you want to, trade Apple, you could buy it. You could buy the stock outright and put your stop below the low. That would be a $13 risk. Or you could buy the option, which is the June 400 call. It's around, let's say, 21 right now, and just risk about $4 to $5 to $6 on that option. And and it really hasn't come down very much. I mean, when Mr. Z in our trading room at TFNN, we've been watching this since the Apple was around 436, and that was around $35, I believe, at one time, that call, and now it's down to 20, and the stock has dropped 50. So it still has some good value, and it's got 5 or 6 weeks left on it, and so that's what you're looking at. We have the earnings for Apple coming out, I believe, tomorrow. And, usually the Apple earnings make the stock go up. But, with a big downtrend like this, who knows? However, if there's going to be a surprise, that could be the thing that makes it move. Now, I don't really care about the earnings. I don't care about the fundamentals. I don't care if they have $700 billion in cash. I'm looking at that chart because that's the sum total of all the buyers and sellers in the market, and that's the one that I'm interested in. I know that if this thing goes much below 385, this pattern's probably not any good. But until that happens, I think we could get an easy, $80 to $100 rally in Apple without even, having any problem at all. That's what I'm looking at when I'm watching this. So this is what we've been waiting for. It's done exactly what we wanted it to do to the day. The price, when you went down to the 30-minute level, came right to the spot where you wanted to look at it, and so this is what we're doing when we're doing technical analysis. We're trying to match these things up to the best thing that we can look at. Overall, when you look at the broad market itself, and I'm going to put in the New York Stock Exchange Index along with the Dow Jones Industrial Average to show you the big discrepancy that we're having here, because the Dow has gone up to new highs above 2007. But the New York Stock Exchange Index, which is much bigger and it's cap-weighted, over 6,000 stocks, as opposed to 30 stocks in the Dow that are price-weighted, they're cap-weighted in the New York Stock Exchange Index. It has only been able to make the 786 retracement of that move. And so this is, one of the reasons why it still looks bearish to me over a long period of time. Also, the fact that copper has been so very bearish. We've never had a divergence in these commodities like we're having with stocks right now, and that usually means that there's something really, really sinister, coming our way. We'll have to, wait and see what it is. I think it's going to be the bond market, but that's just my guess. And believe me, you don't want to rely on guesses. That's the last thing you want to rely on if you're doing these things. The next one that I wanted to, show you is the fact that we've had a big ABCD complete up at the 1.618 expansion into transportation several weeks ago, and the tops that we've had in the transportation index, they've been lower each time, which also is a negative thing that we're watching. After we come back from the break, I certainly want to spend some time on the head and shoulders pattern that we potentially have forming in the bonds, because I really think that's the one that's going to be the one that really surprises everybody, because there's very few people think that we can have higher interest rates, and I think that could be the Achilles heel that we're having into these things that we're watching right now, because we were hoping that hope is a terrible word for speculation, but if we could get the bonds up into this 150 to 154 level one more time, then it would really be something that would really be great. And, that's it. So that's it. Someone asked a question of how am I going to handle the earnings tomorrow with Apple. Frankly, until someone just told me about 5 minutes ago they were going to have earnings in Apple tomorrow, I wouldn't care to speculate. I bought the option when I bought it. Actually, bought it Friday at 21 and change, not much, 21.10 or something like that, and it is that's the amount I'm going to risk. I mean, if it gets really hit, I could lose the whole option premium, I suppose, but that would be something disastrous that I don't have any control over. But realize if it starts to work, that thing's going to be in the money either today or tomorrow. And if a big surprise comes, I could be in a free trade, and that's what my expectation could be. So that's what that's what I'm looking at, with the Apple. If you hold the position long into an earnings report before, I don't remember how many quarters it's been, but better than 85% of the time, if you held Apple into an earnings report, you made money. However, that was in a bull market, and we've been in a bear market since August. That's a totally different thing. When everybody wanted to buy this stock, it's $700 a share. As you remember, there were, as much. There was, well, no, I shouldn't say that, because I was going to say there was almost as much, press on Apple in the news when it was at 700 as we had on the Boston Marathon, but that's certainly not the case. That's a very bad analogy. By the way, I finally figured out something. I know why everybody in Boston that is born and raised there has to have one child named John or Tom. I don't know why that is, but everybody on that program was named John or Tom with just a few exceptions. There might have been one or two Italians that snuck in there, but almost all of them were named John and Tom. I never could figure that out until I watched it. But thank goodness that hopefully this thing is over in Boston and we can move on. Okay, let's get back to the Apple. The thing that you have to realize that during the time when Apple was going up, earnings come out and boom, they would go, the stock would go nuts to the upside. But we've been down. That's a different situation. So we have to be extremely careful all the time, but this is a time we have to be more careful than any other time. So keep that in mind with earnings tomorrow. I'm not on the show, but we'll certainly know Wednesday when I'm on the show, what happened with it. But we're long that call at that June call at 700. I was going to buy the stock itself, but because of the fact that the market closed down on Friday right at the 618, I decided it would be easier to trade the call and risk, $800 on the call as opposed to, buying the stock. I think that if it does turn from here, just a 382 retracement of that move is $100 a share, because Apple came down well over $300 a share, so 38% of 300 is over $100 a share. So that would be the rally potential that you have in this particular trade if it does, work the way that we think it's going to work. And believe me, that's just my opinion, and we all know, what opinions mean. That's not something that we want to, hold our hat to for sure under any circumstances. That's the main thing to remember. We're going to take a little break here, and then I want to do
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I posted into Tiger TV the long-term chart, weekly chart on Dow Jones Industrials, and you can see that it's made a new high. Well, they've been telling us that on CNN or CNBC and Bloomberg for quite some time that we've made new highs, and it's made a beautiful three-drive pattern also. So this is the thing that we're keeping an eye on. But let's take a moment and just take a look what's happened to the S&P over the last 10 days, because we've had a little bit of a downdraft after we ran up there, and I just wanted to show you the harmony that's been going on in this S&P. We had if you'll look at those little triangles, if you go into Tiger TV and take a look at it, from the high we made on April 11th, we had a 4-day sell-off exactly, and then we had a 61% rally, and then we had another 4-day sell-off that stopped at the 1.27 of that low on April the 15th, and now what we've done is we've had a rally back, and then we've had two higher bottoms now since our April 14th low that we had. And that means that, there's a potential for this. If we can get the S&P above this 1560 level in the June futures, we could have an assault back at the old high without too much trouble, doing that. So we'll have to, do it each day at a time. But today's low was an exact 61% retracement of the low we had on Friday to the exact tick. I mean, 1543, and so this market is still in an uptrend until we break that 1543 level. So this is one of the key things that we're keeping an eye on, with the S&P. Someone asked the question about, how does this relate to Apple? Folks, remember, Apple came straight down from August, well, not straight down, but almost from August to where we are now with the market going up. So this is you have to look at it separately. It's a different animal. And, it's a great stock. They have great products and everything, but there's nobody, as a matter of fact, the Wall Street Journal had a full-page thing over the weekend about what was wrong with Apple and all the reasons why the stock had dropped $300 a share. Did we get those reasons when they were at $700 a share? No, because news follows the trend, and that's exactly what's happening. That's old news, So you got to be a little bit ahead of the curve in order to try to beat some of these things, and that's the key of what we're watching, and that's I think it's the main reason why we want to be a trader is because we have these things in our favor of patterns and ratios that give us that little bit of excess or extra edge of trading, and that's all it is. You're trying to get an expert edge. If you don't want to worry about how much money you're trying to make on a trade, you must focus on how much money you have at risk on a trade. That's the main thing that you're looking at. That's what I think is absolutely without doubt the most important thing of anything that we have when we're looking at some of these things that we're looking at. Now I want to go over what Basil talked about. Basil, excuse me, Basil. I know I was making pasta this morning, so I was using Basil. Anyway, Basil talks about the $3 and the VIX and the bonds, of course, are two of those. And I will do some more about the bonds when we come back from the break. But the VIX, last week we had a nice little rally up to the 786 retracement. So we've had, 3 lower highs in the VIX at this 18 level. And now what we're doing is we're backing off, a little bit, to the downside. And that's all it is. It's just a little bit of a thing of, backing off to a little bit lower level, probably around that 1350 level. Be what I would guess. So we will see what will happen to the VIX. But there's no fear out there, folks. Believe me, the VIX index is telling us that there's very little fear in the market at all, and this will not last for very long because if these prices do start to turn down, which eventually, and I think we're pretty close, then I think you'll see the VIX index, eventually get above 30 again without too much trouble. So. That's the factor that we're watching, on the VIX, which I think is an important thing to watch. It's very difficult to trade, but that's the other thing. There is one, we watch 3 things: the Dow, the transportation, and the utilities. And the utilities have been very strong, and they're approaching the 1.618 expansion very, very close. In fact, they might even be there today. I haven't checked the price yet today, but they could be at this 1.618 expansion on the Dow utilities, but again, it's too thin to trade that. The utility index is just something to keep in mind. We got to take another break here. When we get back, we're going to take a look at the gold market and then also the bonds.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we're going to talk a little bit about the gold market. I posted into Tiger TV the long-term weekly chart on gold going back to the 2008 low, and we made a 50% retracement when we got down to that 13.21 an ounce last week or so ago. That was a really nice number. It came in within just I think about $3 or $4 of the exact low, which was what we were looking at. But what's interesting is you see articles in the Bloomberg just the other day. It was over the weekend. I happened to be have it on just while I was doing something, and I noticed that they said the gold had its biggest rally of the year. I mean, what a joke that is. It was rallying into the Cyprus thing, but it wasn't rallying very much. But it was up more than 4 or 5 days in a row. I mean, I don't understand where the people that report this, they must not look at the statistics because, it was certainly wrong. We've got a call from Charlie in Atlanta, Georgia. Are you there, Charlie?
Yes. Good morning, Larry.
How are you, my friend? What can I do for you?
I'm calling about Google. Apple was the leader on the way up first, throughout. And then Google seems to have taken over. But does Google look like it hit a wall just now? Because I'm looking to short it.
Okay, let's take a look at it here because we were looking at this stock several times recently. If you'll give me a second here, I will put the chart up for Google. I want to update it because I did a little bit of traveling over the weekend to visit my grandson, and believe me, you don't want to be going through the airports now. It is not a fun thing to be going through. I really, yeah. The Google is a very, of course, it's a little bit higher than Apple was when it was at this level. But we've had a big ABCD pattern complete up here, and now what we're having is the rally back. And I'll be back with this chart in the room in just in about 15 seconds, just as soon as I finish drawing this last one. There we go. And so what I'm going to put this in here, and you'll be able to see it into Tiger TV. But we made that high up at 845. And then we came down pretty hard for almost a month, and then we had a really strong day on Friday, and we had a little bit higher high today. Haven't done very much so far, but I'd be looking to sell Google if we make a 61% retracement. That would be up around the 811 level, and then you'd have to stop it above 825 is what I would be looking at. But it's completed a major butterfly pattern. Going over the last 6 months, just like Apple did. I mean, Apple made that same butterfly pattern at the top, and that's the same thing that we had happen, with Google. But Google hasn't come off as much yet, but it's still, very, very early. So I agree with you. I would be looking to sell that stock at around the 811. Today's retracement was only 50%, Charlie. So I don't like 50% moves unless I have a really nice ABCD pattern there, and I don't have that so far, so I'd have to wait for 811 a share in Google.
Okay.
Does that help?
Yeah, it helps a lot.
Okay.
In the same light, I don't know.
Yeah, thanks a lot.
Thank you, bye.
You bet. Have a nice day.
Thanks for the help. Bye.
You bet. By the way, I think Google has got to be one of the greatest companies. I don't use Apple stuff because I don't use Apple computers, and I don't have an iPod or iPhone or stuff like that, but boy, I use Google all the time. I think that's an incredible product, and stop and think it's such a new stock. I remember when it came out the first day in Google because a friend of mine wanted to buy the stock, and it had the same type of move that we had in Apple, where the market on Friday, where the market went up and then came back and stopped at a 61% retrace. Actually, it was a 786 retracement in Google. I believe it was around $70 a share. And he bought it, and 3 days later, he made the bad mistake of doubling his money at $140 a share. And, of course, the stock never looked back. And, he always reminds me of that. But, that that's the way trading goes. Can't do anything about that. Let's take a look at gold. We looked at it on the weekly basis. And what we want to do now is we want to go and look at what happens over the last 5 or 6 days in gold, because I think that gives us a clue to what's really happening. Now, if you get a chance to look at Tiger TV, you'll see after we made that low down at 13.21, we had a rally of about $80 an ounce, and then we had a beautiful Gartley pattern form at the 786 retracement at 13.36, and then we completed the ABCD up at 14.24. And then we backed off to the 382 on Friday at the 392 level, and that set up a potential to take out the 1428 high, which it did today. Now, that sets up, because that was a 1.27 expansion, we've rallied $120 an ounce in gold in the last 5 trading sessions. Okay? So all you do is you take 120 and you multiply that times 0.618, and that'll come out to about $70 a share. And if you take the high we made today at around 13.38 and you subtract 70, that's going to get you about $70 lower. So at around 13.80, see 40 and 70 would be 70. So around a 13.70 level, you're going to be making a 61% retracement of this whole move that started on the 15th of April. And you'd be buying it, and not only that, you'd be buying it in an uptrend, a short-term uptrend, because we made a higher bottom on the 17th, and if we make another bottom on the 23rd tomorrow at around the 13.75 level or so, that would give us a really good spot to enter gold without risking very much. So that's what I'm looking at as I go to a macro view and then I go down to the micro view. That's exactly what I tried to do on the show today when we were looking at Apple, going from the weekly and then to the daily and then down to the 30-minute chart. That's primarily what I try to do, is go down to the 60-minute or the 30-minute chart to look at these. So that would give us a really nice spot to look at the gold. Someone asked me the question, what is the exact number on that gold chart? And if you'll give me a second here, I will bring it up for you because I'm going to do it on the 15-minute because that's the one I've got here right now, and I don't have to mess with it very much. And I will put this in for us. We'll be able to see it. It would come in at, I was right, 1378 would be the, 1368 is the number that I'm looking at in the gold to make that retracement. That would be the number that I would be watching, to buy the gold. Now, a lot of things can happen, and, there'll be some, if I find some ABCD patterns in this, 15 or 30-minute chart that are tradable, I'll certainly do that. But that's the process that I go through is to try to find the higher bottoms or lower tops, and that's what I'm looking at. I think gold has a potential for a really strong rally because everybody is bearish now. I mean, you can't find anybody that is, there's a few people out there that are perennial, bulls in gold, and but longer term, it's been hurt very, very badly by this sell-off that took us down from 1930 an ounce down to 1327. That was $600 an ounce drop. That's a pretty big hit for somebody that holds it for a long period of time. But if we can get gold down to this 1370 level one more time, then I really think that's going to be a real key to look at. So we'll be watching that on the show on Wednesday and also on the commodity show on Thursday, just to see if, in fact, we get that type of move. The last time we had the good correction after we had the bottom at 1322, the market corrected from 1403 all the way down to 1335. So again, it dropped another $65 an ounce, and that's exactly what we're expecting now. We're expecting that same thing to occur. In fact, what I'll do is I'll put this into Tiger TV in the form of a little colorful ellipse, and you'll be able to see the similarities. If I can just catch this right on the money, I'm having a difficult time. Okay, there's one, and if you'll give me a second, I'll try to get the other one. There we go. And you'll see that both of these would be, very, very similar rallies, and that's what you like. Declines, and that's what you'd like to see. You'd be matching the same decline that we had from April 16th into the 17th, that 2-day decline. You're looking for the same correction to come in at around the 1368 to 1370 level. So that's why we're watching, because the markets don't do anything different, folks. They do the same thing every day. AB equals CD. Either AB equals CD up, AB equals CD down, and sometimes they go sideways for a little bit, which is nothing more than a choppy ABCD. So the trend is basically, if you have higher bottoms, you're in an uptrend. If you have lower tops, you're in a downtrend, and you have to determine what that time frame is that you're trading. Because if you look at the long-term weekly chart in gold, it's still in a long-term uptrend. If you look at the daily, it's in a downtrend. If you look at the 30-minute or 60-minute, it's in an uptrend. So you've got to define the trend by the amount of time that you're looking at. What is the time frame that you're looking at? Otherwise, you're not doing anything to try to make anything different. You've got to do something different than what everybody else is doing. Otherwise, you're just being average, and average is not what you try to be in our business. You try to be a little above average. That's the main thing that we're trying to do. Now, I want to get to the bond market, and I think we'll start out by taking a look at the bonds. One of the things that I'm looking for, I was hoping, now I hate to use that word in speculation, but we hit that 61% retracement up to the 148.04 level. That's exactly where we're trading now. But we did take out, we matched the highs that we made last Thursday, and I really would like to see the bonds get up to that the 150 level, or even a little bit higher. That's what I'd like to get them to, because that sets up a massive head and shoulders pattern that I think is really the one that is going to be the big one to watch. This is the weekly chart that I'm going to post into Tiger TV here. You'll see the head and shoulders pattern that goes back to 2011. We made a high in July of 2012. And the right shoulder, which would be coming in time, would be any time now, because between May and July, we'd be expecting this to happen. You'd have the lower tops and you'd have the head and shoulders pattern coming in at this 150 to 154 level. So that's the key thing, that I'm watching, and I believe that's the Achilles heel in the economy, because no one is thinking that we could have higher interest rates because of all these things that the Federal Preserve does, whatever you want to call it, Federal Reserve, and but they've made a really bad mistake here. They're going to really hurt the markets a lot. This is exactly what happened with long-term capital. They didn't think that they were invincible, or they thought they were invincible, and yet what happened was they had such large positions they were not able to liquidate, and that's what caused the the big problem, with that, and they went bankrupt, and the Fed had to come in and save them because they were too big to fail also. So we want to watch the bonds as we get up to this next level that we're looking at very, very closely. You'll see that we're between 148, I was hoping 150, but between 148 and 150 is what I'm looking at. Someone asked the question, what will I do if this 148, is the correction and we don't go any farther? Then I will say I will find a place intraday, to take a look at them, and that's always a possibility. I'm going to post the note chart, because the note chart shows that we've been in a downtrend in notes since last July also, and the rally that we made a week or so ago stopped exactly at the 61% retracement, and we matched that again today. So this is another factor that tells us that we're getting very, very close to seeing higher interest rates come in into the market. So if that is the case, then we really want to get ready to be to short these bonds. People are still clamoring for yield. They're buying high-grade bonds, high-yield bonds, which are junk bonds. They're buying them more than they are on a percentage basis, on a yield basis. They're searching for yield. The difference in the spread between the high-grade junk bonds, I don't know, like high yield, not high-grade, between the junk bonds and the 30-year bonds is 2 percentage points, and they're looking for that. And the reason why is the people that have their money in savings passbooks, they're getting massacred. They got this massive tax on that the Federal Reserve has put on them because they're trying to save money, and if they try to save money, what happens is they don't make any interest on it. So it amounts to a big tax on people that have retirement incomes and things like that, and that's not fair, but unfortunately, they don't have to worry about being fair. The Fed wants to get the stock market higher, and that's what they're trying to do, and it's been working. Bernanke believes that if we get the price of these bonds, or not bonds, the price of the stocks a lot higher, people are going to have the wealth effect. The problem is most people are not involved in the wealth effect as much as they should be. There's a lot of people that are not even in the stock market. It's not a broad thing that you look at. But I'm going to put the high yield bond chart, in there, and you'll see that it's almost it's already above the January highs by quite a bit. It's already above the July highs, so you can see it's making newer highs where you're not doing that in the 30-year bond and also in the Treasury note. So people are clamoring for yield, and they're buying IE junk bonds. And that's what they used to be called, but now they're called high yield bonds. The old Mr. Milken at Drexel Burnham, the thankfulness for that. Hey, we got to take a little break here, and we'll be right back.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and I want to talk a little bit about these social networking things. I posted into Tiger TV something from a tech site that someone sent me who is up to date on this stuff. And Rayathan, who's located here in Tucson and works on this particular project, this project, what it's called is RIOT, R-I-O-T, RIOT, and it means Rapid Information Overlay Technology. And basically what they do is they go into Facebook and they pull out all the information that they can, and they put these trillions of pieces of data together, and it's for the government, so they're able to track certain things. So, just remember when you're in Facebook that, you're in a public domain there, so that you have to be really careful with what you post in there. I've never used Facebook. I've only used Twitter once or twice. But I'm really leery when the government gets too involved in the private sector of everything we're doing. So who knows? Anyway, let's get back to the markets. I want to bring up the dollar index because I think this is the key pretty much to what we're looking at in some of these markets. If you get a chance, you'll see that the dollar index came down and made a 38% retracement of the move that we had from late January. Started in late January, we went from 79 and change all the way up to 83, and we backed off to just below the 82 level, and that was a 382 retracement. And we made that level twice, 2 weeks apart. In other words, the market came down for 2 weeks after making the first 382 retracement, and then it took 2 weeks to come down and make the second one, and it couldn't go lower. And then, of course, the last couple of days, the dollar has been, really pretty strong. I still believe the euro is going to go below 120 without much trouble over a long period of time. But this is what we're looking at. Our fearless leader, Tom O'Brien, has told us, it's king dollar, and that certainly looks like it's going to be the case. I hear people, all the time, talk about, the dollar's demise because of inflation and, printing money and all of this. If that's were the case, folks, gold would be at $3,000, not at $1,400 and change. That's the way it looks like it is to me. So anyway, the dollar looks like it's had a lot of support in here. If it were to go below 81.50, then all this would be off. The bets would be off, and that means that the euro would have to get above the 133 level, and then start another leg to the upside. But right now, it looks like the euro is heading lower, and that's what I'm looking at. There's a potential for a really nice trade coming up in the British pound, and I want to put that in here to let you take a look at it, because this is a really nice trade that has set up relatively well. But if we could get that British pound up to that 153 level, that would be a perfect 382 retracement of the move down from January into March, and it's taken several weeks to get to that level. So we need to get the British pound. Actually, 154 is what you're looking at in the British pound. To take a look to go short. Someone asked me what would be my first profit objective in Apple. Your hands are tied with the earnings coming out in Apple tomorrow. You're between the proverbial rock and the hard place. The good part is pretty much that these patterns, if they are correct, have completed. And if you put the option trade on, you could probably risk $5 to $7 if the market gaps badly. If you own the stock outright, you're probably not going to have a whole lot of control over the gap. But realize the market is incredibly oversold in Apple. All the news is bearish in Apple now. And I don't know what the earnings expectations are for. I hope they're looking for really bad earnings. That's what if I want to do the opposite of what the market's doing, I want the market to surprise on the upside, not on the downside. So this is something we have no control over. We'll cover this when we get back to the show on Wednesday. Live every day in an attitude of gratitude, my friends, and may God bless.